Welcome to Beyond the Deck, a presentation of AgoraCon in which company PowerPoints come to life with a live management walkthrough and discussion. If you believe in the future of high-speed internet access for the whole world, I've got 800 million reasons for you to love this presentation with NuRan Wireless. Why is that? Most of us on the Zoom take high-speed internet access on our phones and our laptops and other devices for granted, but it's a major problem for rural remote areas, especially in developing nations around the world. NuRan is a leading supplier of mobile and broadband wireless infrastructure solutions for mobile network operators and internet service providers in remote and rural regions around the world. More than just lip service, the company signed over $800 million in contracts over the next 10 years, spanning 7 countries with 2 of the largest mobile network operators in the world, and their target within 5 years is to have 10,000 sites operating, $200 million in revenue, $100 million in EBITDA in 15 countries and 2 continents. Here to walk us through the deck, Francis Letourneau, CEO, Jim Bailey, the CFO. Gentlemen, welcome Beyond the Deck.
Thank you, George. Thanks for having us.
Thank you, George.
Hey, gents, before we go into the deck, there are going to be a lot of new people. Obviously, NuRan has a very big shareholder following, but there are also going to be a lot of new people watching us today, next week, next month, as they discover NuRan. Give us a 30,000-foot, 30-second overview of the problem that you guys are solving.
Tough to do it in 30 seconds, but you have to see us as an extension of a mobile network operator. Those guys are not investing much in the rural area, so NuRan take over the risk and responsibility to deploy network connecting the unconnected, so villages here and there across Africa. So we're building the infrastructure from the ground up, tower, power, radios, and we manage this network under 10 years contract for the mobile operator. So you have to see us as the left arm extending the network for the mobile network operator.
Perfect description. Maybe it took you 40 seconds. That's great. So with that note, guys, we've got the deck up in front right here, and usually investors have to read the deck on their own, and they have a lot of questions because there are nuances in these decks. But what's great about you guys walking us through it is we're bringing it to life. So Jim, I'll let you take over, control the screen there, and guys, let's walk through the deck.
Thank you. So George, one of the things that we've seen and a lot of questions asked throughout the project from different shareholders, we thought it would be good to just explain and walk our people through how we finance this infrastructure, how the money flows within the company. And we thought doing some kind of, let's call it tutorial or NuRan 101 to explain people on their due diligence side what to understand of how the money flows, how we finance this infrastructure. So we'll be running some videos. This one is about financing and the financials. So Jim is going to walk us through the various financing options that we have, the various challenges and opportunities that we have with those equity or debt investors, but we wanted to shed some light on this aspect of the business, which is kind of important, as deploying 10,000 sites, which are valued maybe 25K each on an average. So you can see that there's a potential of 250 million to be invested to reach that target. So we wanted to walk you through this thing, and let me start with the targets that you have just outlined a couple of seconds ago. The company has set itself objective to deploy 10,000 sites, reaching 200 million in revenue USD, that's a target, and 100 million USD EBITDA during the same period. And all of this running throughout the 15 countries and 2 continents. So far, to get to that point, NuRan has secured 7 contracts with 2 of the largest operators in Africa, namely Orange and MTN. Plus, on top of this, we have already signed a GFA, a group framework agreement with MTN, that allow us to tap into 20 countries, potentially 19,000 sites. We have 4 countries already in contract with MTN, and it will grow shortly. But we're also in discussion with other MNOs for 3,000 site on top of this in Africa. And we're also planning some expansion in Latin America and APAC. On the other side, economics of NAS contract have shown huge potential to raise financing.
And by the way, NAS's network as a service.
Yeah, thank you.
That's an acronym that if investors reading this by themselves tonight, they wouldn't know. So network as a service.
Yeah, you can view it. Everybody knows about SaaS, software as a service. So it's a common name on the market. So network as a service is this infrastructure that is put in place in those villages running for years. And this is what we call network as a service, because we go full-blown turnkey managed service for the operator. So that's why it's called NAS. So far we have a capital raised or approved of 59 million since we made that shift in 2021. And we also have, as I said, contracts with Cameroon, DRC and Madagascar with Orange, MTN, South Sudan, Namibia, Sudan, and Ivory Coast. They have signed off for 4,642 sites. So this is our backlog, and we have option to increase those quantities. So we're on the way to reach our target. Of course, one of the major, or I would say the most important milestone is to bring the financing to convert this backlog into fruition. And this is what we will be talking about during the course of this presentation.
And before we move on to the next slide, for new investors who are just discovering NuRan, they're watching this Beyond the Deck for the first time. I call that third-party validation, because there are a lot of companies in the world. Georgecom Wireless, I got this great idea. I think I could bring high-speed access to villages in Greece. But none of us really know, okay, is George's technology going to work? Does it work? How is it relative to competition? Francis, this gives you the third-party validation when you're working with 2 biggest mobile operators in the world, and you've got this level of contract signed together. Clearly, you guys are a front runner in this solution space, right?
Exact. So you have to know that NuRan at the start is an equipment. We were in the equipment business, so we were building solutions for that rural market. Through the Facebook relationship that we have started back in 2015, where we co-developed some products, we went together and do pilots and ran pilots and initial deployments with those mobile network operator for a validation of our technology, which has happened. But we needed to have a business model that suits their needs, and hence the reason for bringing this NAS model into in the market. And that's how we were able to sign off those contracts with Cameroon, Madagascar, for Orange and MTN. So those guys have rubber stamped our network solution. And now, of course, on top of it, since we're bringing the infrastructure and everything, and we're managing it throughout the years, so that's exactly what the mobile network operator were looking for. And we're right in the middle of this massive opportunity to bring connectivity to the unconnected.
Well, hats off to you guys, because as a founder, owner, operator of a company myself, I understand the magnitude of what you guys have been able to pull off here. It's one thing to have an idea. It's one thing to present it. It's one thing to have it accepted. Then it's one thing to get contracts signed. So hats off to you guys. Let's move on to the next slide.
Yeah, thank you. So as I said, moving on to this slide, 7 contracts already signed with Orange and MTN for the 7 countries mentioned already. That's bringing up to 800 million USD of contract over the course of the 10 years. We have so far deployed 164 sites, and the data shown major stamp as well to our business model. So when we talk to investor, more than just having contracts in place, we now have sufficient data to prove our potential investor that it's a workable business model, and that it's showing up with huge potential. So that's that's how we got to discuss with major groups out there. So Jim will be running us through this. But so far we have contracts in those countries. The two largest contracts, of course, are for or are with Orange and DRC for 2,000 sites, and MTN in Ivory Coast for 1,000 sites. I was last week until yesterday in Madagascar to start operation. So I was there to meet with Orange, kick off our operation, but also rent the space, hire people, and put together the basis to what is going to become NuRan Madagascar SRAL, and the other one to come are Ivory Coast, of course, Namibia. Sudan is, of course, paused by the political situation today, but we have a huge potential here, and we're connecting people, bringing revenue. So, Jim, if you want to add something, feel free to do it. But so far, this is what we've been achieving in contracts, and we have a huge pipeline to add up to those 4,600 sites. But right now, the most important thing for us, yes, signing contract is important, but it's, of course, bringing the proper financing in order to deliver the backlog and demonstrate our business model.
Yeah, I think the one thing I would add, Francis, is, you talked about us being a product company. George, you mentioned the credibility we have from signing these contracts. Right. You're right about that. The one thing that's really impressed me, I've been with the company just over 3 years now, but we've had equipment in the field. The company has equipment in the field globally, in very harsh environments. By definition, these rural areas are very harsh environments.
Yeah.
And, we're bringing together a lot of pieces. So as you said, it's not an easy thing to deliver, but in terms of robustness and ruggedness of the equipment, we don't have issues with faults or problems like that. So it's like you say, it's one thing to have the idea and to take it through the various stages, but to actually see the equipment out there and operating, and immediately, bringing connectivity and to the local population, bringing revenue to the mobile operator, it just helps bolster the story.
Yeah, and seeing the satisfaction from the people themselves that they're actually connected. I mean, can you imagine, for everybody at home watching this or listening, if you listen by podcast, but think for a second, if you didn't have internet access or didn't have high-speed access and suddenly it turns on, it's like you've just stepped into a new universe. So that's amazing. Yeah. Mm-hmm. By the way, one thing I want to throw in here is anybody seeing this live for the first time will notice one thing. You're dominating the continent of Africa. And we all know, we've all seen the reports that, that's where growth is going to really take place. Everyone talks about the growth of Africa for the remainder of this century. Francis, you kind of alluded to it. This almost seems like the beginning. There's more to come, right? Because Africa is just growing, and it seems like you guys have a real foothold.
If you look at the surveys done by the tower companies over Africa, there's over 30,000 towers minimum to be built in the next 5 years in Africa. Wow. So we're right in the middle of it. The population is there, the demand is there, the operator welcome the type of solution that we're bringing to the market. So it's just a natural for our business model to be successable in this continent.
All right. The other thing I would...
go ahead, Jim. Sorry.
I just wanted to say, a lot of what we're doing now is on the back of the COVID pandemic, of course. I mean, you're right. You're absolutely right. Africa has been a developing market and seeing huge growth and a young population and an entrepreneurial population. I think what happened with the pandemic is the emphasis on connectivity became that much greater. And it raised the fact that places like Africa need that connectivity, because what you find is, the people in these villages have the skills, have the products to bring to market. And so our funders and others in the space, it's all on the back of that shock, if you will, that put the emphasis on connectivity. So we're
a catalyst.
Yeah.
COVID was the catalyst.
It was very much so. Yeah.
Great. Next slide, guys. This is awesome.
Okay.
Yeah, so just wanted to shed some light a bit on the type of infrastructure we put there. You have images, but usually the way we are serving our client base, namely Orange and MTN, is through various type of site categories. We've mentioned 4 in there, so depending which contract we do where, we can tap into various site categories that we have, let's say we've built recipes for. You have 4 examples right here of from a small site to a larger suburban type infrastructure that you see and slide in the rural for using 2G, 3G, 4G, which is likely to be deserved by our XG platform. So you have here the 4 different categories of site with the capex, the typical average capex that is used to build. And when I talk about capex, it's all inclusive. So the radios, the antennas, the backhauling system, power system, tower, fences, and include transportation to the site, and also everything related to clearing out duty. So that's a full turnkey capex that you see there. So you will probably figure out that this is the money that need to be spent early in the project in order to get going and to have those revenues kicking in. So that leads to the follow-on slides that will explain how we intend to finance this and how our operating net profit, once we are in full operation, is going to contribute to this as well.
And great to see for everyone the actual towers in action, for lack of a better term. And I'm also impressed with the fact that the capex for the towers is between 17 and 52,000. So very realistic, very doable. Awesome slide. Let's move on.
Thank you.
Okay, so I take on here. So yeah, as you mentioned, we talk about the capex of these sites. It should be pointed out that the configuration and the sites that we're using are really low cost, relatively speaking, to what's available in the market. Okay, so that's an important point. But what we wanted to do was talk a bit more about the potential, how we see the next few years playing out. We issued some guidance back in July to talk about our business plan. We wanted people to understand what we're playing for. There's a lot of work that goes into it, not just signing the contracts, but establishing these entities, as Francis talked about, getting all our licensing and approvals to operate in those countries, and of course to bring the financing, because what we're doing with Network as a Service is we are building the entire network, financing the network for the mobile operator, and then getting paid back through a revenue share. So what we wanted to show here was where we see the business going. I want to point out that this is subject, we're saying, closing the DFI loans, which we've talked about a lot, and we've put out a lot of press on those loans. It's not just subject to that, because we are following other avenues of raising finance, and that's what I want to talk about as well. But based on our expectations and our expectations of when we can close, we're expecting that we can have 1,500 sites live by the end of next year. So in the next 15 months or so. And the objective initially is to get to 2,500 sites by the end of 2025. So 1,500 in the next 15 months, and then 1,000 the year after that. And whether it plays out exactly like that, we'll see. But really, that 2,500 target is our initial target. That gets us to next year revenues of about $20 million US, and then $50 million US by 2025. The important thing about this, and one of the big things we wanted to point out, is that we become EBITDA positive early next year.
That's fantastic and so important.
And that's probably it's probably about between 500 and 600 sites. So our real objective is to get to that point, because it means a lot of flexibility for us. All of a sudden, we're generating enough cash to keep the business going, and then we can adjust the build as we go. But next year, we could hit 6 million of EBITDA in total, and 25 million by 2025. So that EBITDA positive target is really where we're focused at. We have about half of that in terms of sites sitting in country already, ready to be deployed. So it's just a case of funding the last piece. And then the other half we're in construction and procurement now, and we'll be delivering that then. So that is target one, and then getting to the 2,500 sites is let's say target two.
And by the way, this is real important, even more important than 2021. Why? The small cap space, the risk space is going through a catharsis everywhere. But we see it in the small cap space, and that's because George Com Widgets has a great idea, but they really don't have any path to revenue. Forget about EBITDA or cash flow positive or profitability, anything like that. So those companies are literally dying. The idea companies that in 2021 were attracting all sorts of funding because of great blue sky potential are suffering, whereas you guys are delivering a real path to revenue and being EBITDA positive. So that's I just want to point that out.
Yeah. And that's what we're trying to get. That's the message we really want to get out there. This is what it is to play for.
And if I may add to it just a bit, Jim, this outlook is just based on the current backlog, but we concentrate on our target of rollout. The 2,500 site is just over 60% of the current backlog. Of course, we will continue to raise capital or focused on our net profit to continue to engage and deploy. But as we grow, we will, of course, bring more contracts, bring more everything. But we wanted to see with those 2,500 sites, which is 1/4 of our target, what kind of revenue we could hit. So it's extremely impressive, and the Cameroon operation is showing up as this potential could be hit, and this is what we are demonstrating to our various potential equity players or other debt players that we are talking to right now. So this is simple. We focus on those 2,500 sites, but on top of this, multiply it by 4, and this is the potential of the company.
Perfect.
Yeah. So let's go to the next slide. So this is really the how are we going to get there, and we wanted to put some detail behind those top line numbers. I mentioned the DFI financing. If you look on the right, with 2,500 sites, we're talking about an 80 million infrastructure investment. That's how much the CapEx is. So you saw on Francis's previous slide where we have the various site types. This averages for 2,500 sites is about that 32,000 mark. That was the sort of third site, which is the probably the most popular in terms of coverage it brings and capacity and so on. So we've got an 80 million amount, let's say, that we have to hit. The DFI loans are for 27 million US. So that's a part of that. On the back of that, we're bringing equity, and we've been out in the market for some time now, talking to equity players. I'll talk a bit more about the types in a minute, but we're looking at 40 million, and that is coming into the Mauritius holding company. So the way we've structured the company, we have a Canadian Topco. Beneath that is a Mauritius holding company, and that's the most beneficial for working in Africa. And then the subsidiaries themselves, because in each country we set up a company, they sit under Mauritius. So we're bringing this money, the DFI loans and the equity, into Mauritius. And in that way, we're not diluting the Canadian public company. But what it also does is it brings focus on Africa, which a lot of the funds we're talking to like. Okay. Right. And again, I'll talk about those in a minute.
How do those funds, Jim, so great structure, makes sense, but people at home might be wondering, how do those funds flow into the Canadian Pubco, or for the benefit of the Canadian Pubco, do what's got to do?
Well, I'll come on to that in a bit, but essentially, so what's happening here is we've got 80 million. There's 27 plus 40 of debt and equity. That still leaves a gap. How do we bring that? We're generating cash. So immediately when you turn on a site, it's generating cash. It's connecting to the handsets that are in the region, and it's mostly prepaid phones. In fact, it's pretty much all prepaid phones. So they've got credit on the phone. They can all of a sudden be using it. And so we're generating that cash into the business. I'll come on to how we flow this back down a bit later, but it's exactly right. And
Okay.
what we think we can do with by just this funding package is in fact build the whole backlog, do those 4,642 sites. That's what we said. It will take us a bit longer. So it's all about how quickly we build. But by 2029, in about 6 years, we could have the full backlog built just with this funding, just from the cash that's generated internally.
Yeah, and I can, and first of all, that's awesome to have as a backstop. But I'm pretty confident. I don't know. That's my own opinion here. That once the cash starts getting generated, and the machines start, then you're gonna attract the attention of companies all over the world, either equity or debt. And I don't think it's going to be a problem. But good to know that you can finance it from your own cash flow if you really had to. At the end of the day, that's great security to have.
And that's why that objective for us to get to EBITDA positive, so we're generating positive cash, is so important to us. And okay, so I talk about this 40 million of equity coming alongside the debt. We will always have debt in the capital structure. It's the most efficient way to finance. It's most efficient for shareholders. And oh, by the way, this is infrastructure. It's hard assets, so people like to lend against hard assets. But alongside that, we of course need to bring equity. And so we're taking a few approaches to that. Top line, we're saying, okay, look, we could raise the entire 40 from these groups: private equity funds, infrastructure, impact funds. There's groups that are funding renewable type of projects because we use solar power exclusively. So this ticks a lot of boxes on the ESG front. In addition to development and bringing connectivity, we're using, environmentally friendly technology. So there's funds like that: Africa Development Banks, infra energy funds, institutions, the big Macquarie's, Brookfields, those types of companies are the ones that are funding. And this is their ticket size, if you will. They like to be in the 20, 40 plus range. So the fact that we have this need fits with what they're doing. Now, our idea as well is to bring that. We're bringing that second tier, which is 5 to 10 million of a sort of quicker equity, if you will. We're talking to high net worth individuals. So there's private individuals out there that have a real interest, have already a presence in Africa, already have business interests there, already have partnerships, etc. So we're talking to those people, and of course family offices. I'm here in the UK. London is covered with family offices. It's a great base for them, and that's where the rich families of the world are kind of managing their money and have professional managers, and those are the people we're pitching to. That 5 to 10 is again about accelerating that EBITDA positive point. So that's important to us. We've also got some bridge financing, and again, all of this is going into at the Mauritius level. We've done the bridge financing in Canada, but this is at Mauritius. So this is a way, and basically what they're doing is saying, okay, look, you've got the infrastructure funds. We know these guys take long. We'll bridge that gap. And there's funds out there that are specifically saying, we get the need, we get the development initiative, and we want to see that happen. We don't want to see, internal process and this type of thing stop you bringing that connectivity. So it really resonates with groups like that. And that's where we're talking with someone about a bridge financing of $1 million. We could bring more of those, but they're sort of about accelerating the pieces that are coming next. And then in addition, we're talking to, commercial banks, local banks in Africa. One in particular, we announced a while back, over a year now, that we had a facility with Afriland First Bank, very prominent bank with a base in Cameroon and that region of Africa. They've said to us, okay, look, we see you've got the sites generating cash. We can provide you like a working capital and facilities to help bring extra cash in. What we did, and just to remind people, and for some it's new, but initially the EIB financing was for 15 of that 27. And then EIB said, okay, hang on a sec, you've got this local financing. Why don't we just roll that into ours and then it's all one debt package? And so that's what we did some time ago. But Afroland is still there. A lot of the other banks are still there, and they're all interested. Now that we've got sites in production, now that we've got revenue generation, now that we've got proven cash flow, it becomes a much less risky and a much more attractive proposition to them.
So, gents, clearly you've got all the right players at the table. You've got the options in front of you. So that's not an issue. Francis, what's your level of confidence that you're going to take the financing stage over the line sometime in the near future? How are you guys feeling about that?
Everything takes a certain time, but if you go per level, if you start from the bottom to the top, this is how those could happen fairly quickly as we go. Of course, EIB is we were shooting for September. I still believe that we can do it. So we'll provide our shareholder in due time some updates about this. But right now, if you look at this, those are all activities, financing activities that we have ongoing, and all of those could happen quite shortly to allow us to go straight and fast to the positive EBITDA stream. The 20-40 million might take a bit more time, but the first four at the bottom, starting from debt providers up to the 5 to 10 million of with high net worth individuals and family, we're talking to about 25 groups in that sector, and it's moving along quite well. We've got brokers, agents on the ground, plus our own internal team that are entertaining the discussions. We should be receiving term sheets in the course of the next couple of weeks. So it looks good. It looks really good.
That's great. That's great, Francis. Love to hear that.
And,
next, go ahead, Jim.
Let's go to the last one. I was just going to say the last point on the slide there is we're able to, we've got this due diligence package, we've got this story, we've done all this work so far. We're using that across the other parties, so it speeds up the process, and that's been a big benefit for us as well. But this slide, so a lot of words here, but this is really explaining how the cash flows. Just getting back to your question earlier, George, about how the cash flows around. So look, we're raising this money into Mauritius, and the question, okay, how does it get to fund Canada? How does it fund your production? How does it fund your R&D? How does all that work? This is how we do it. So basically, the Canadian company has been providing its products. We've sold our radio equipment into these subsidiaries, and we also provide services. So all the people in Canada, we have a network operations center there. We've got a procurement team there. Then we got project management. All of that, we're effectively working as a virtual global company. So there's no point putting people in the local countries. We can use our Canadian staff to provide this type of, all the services we need. So we cross-charge those to the African operations. We also have spent money directly. So up until now, we've raised money into Canada and funded it down to Africa. In future, it's going to work the other way. But all that money that has gone in, and I should add all these agreements and the charges has to all be in compliance with international, what they call transfer pricing rules. And so we've had to we've got studies and all the rest of it that show that those are arm's length reasonable charges. To date, we've contributed about 15 million Canadian dollars into those operations. We recently announced this factoring deal, and we talked about that same number of 15 million. So the beauty of this arrangement is, and the factoring that we announced, is it follows a good business logic. So we've put the money into Africa. The money's going to come out. So when we get the DFI loans and the equity coming in, we get paid back to the parent. So we get paid for the equipment we've provided. We also pay for some of that. And the way the loans work is it's funding back to when we started the project. It's not just starting from now. Because we agreed the total size of the project, and it actually started in 2021, that money goes to cover the bills and the network that we've already installed. So all of a sudden, we've got this cash coming into Canada and to fund the rest of our operations. We'll use that, as we said, we'll cover our operating expenses. We'll also repay some of that debt, some of that bridge financing, some of the debt we have at the parent level. And we can use those funds to continue this virtuous circle and invest in other countries. So into Ivory Coast, into Madagascar. The DFI loans are the ones, the EIB and the other DFI loan for 27 million is to be used in Cameroon and DRC. But we'll use our equity to go into the other countries, and then if we bring more debt, we'll use that to go into the other 5 markets that we're in. So really, the funding strategy at the moment is all about these 2,500 sites, getting to that EBITDA positive, deploying the stuff that's in inventory, and getting sort of halfway to our backlog, and then we'll supplement with other debt or equity at Mauritius, at the parent public company, but we'll assess the situation as the time comes, and accelerate the build plan or not, as the case may be. As we said, we could fund that out of operating cash flow, but we will try and raise money and borrow money to accelerate that build and get through that that backlog, and as we go to 10,000 sites.
The finance side of me says, I like that structure. That's a smart structure. I like how you said you're working like a virtual global company. And the lawyer side of me says, I like the fact that you're also in compliance with the transfer rules to make sure you're reasonably charging the Mauritius company and not trying. And a lot of people don't realize those nuances, but things like that can sink you if the Canadian company is trying to be predatory just to suck all the money out of the Mauritius thing. So, guys, great validation, great product, great mission statement, and a great financing structure. And it's a pleasure to see, and especially for investors who are watching this for the first time and discovering NuRan. I think it warrants them diving even deeper into this company, getting to your website, take a look at all your press releases, and of course, most importantly, keep up with the company. Put them on your radar screen now so you keep up with developments, because Francis, as you said earlier, you could be weeks away from some of these financing triggers starting the avalanche, and everyone should stay tuned. Last words to you, Francis, because I know both of you guys are on the road. Francis, you just got back from Africa. Jim, you're on the road in just the next few minutes. So Francis, last word to you, my friend.
Thank you, George. Yes, so that was important. First of all, it's one of a series of tutorial that we will put together. The next one might be operations, so we'll tap into this, George, in the next few days or maybe the next few weeks. But that was just to outline the potential of our business and how we intend to fund and show that the finance or the money flowing within the company is kind of pretty well set to create value for our shareholders. Bringing debt alongside with equity and reinvesting our own money into this equation is just a pure demonstration that this project or this business model works. We'll prove that in the next few months, and as soon as we reach positive EBITDA, it will be a major milestone. This is really our focus. Jim and I are really big onto those things, so we're pushing hard to get this done. So thank you very much for having us today, George.
No, guys, thank you very much for doing this, because it's one thing for an investor to get to your website, go through the deck, understand most of it for sure, but there are a lot of nuances, there are a lot of questions, and you guys explain the nuances, and B, we kind of anticipated some of the questions also. You've addressed them here, so I think this has been extremely valuable. And congratulations on how far you brought NuRan to date. And for everyone at home that's watching or this by podcast, we encourage you to do 2 things. 1, follow the company, put them on your radar screen. 2, if you want to know more about the company, even more about some of the explanations of what they do, they've got a great profile page on Agoracom, and more importantly, a verified, moderated discussion forum on Agoracom. So you can engage with management, can engage with the shareholders. It's civilized, and constructive, and we encourage all of you to participate that. Thank you for joining us. Have a great day. See you on the next one.
Thank you.
Thanks a lot, George.
Hey guys, the video's over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our YouTube channel so you never miss another great Agoracom small cap video.